How are Treasury rates trending? Where have we seen the biggest moves recently? And are we still laddering T-bills? Hello, members and super savers. Many of you have asked for a T-bill update, so we created this one just for you. And these are the 3 questions I'll be covering in today's video. Here's our front of video disclaimer as customary. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. So, here are the most recent T-bill and CMB auction results. This column shows the Treasury security. This column shows when the most recently auctioned off security will be or was issued. And this column shows the investment rate from the most recent auction this past week. Here we have the investment rate from the auction 2 weeks ago. And here we have the investment rate from the auction 3 weeks ago. And this column shows the investment rate from the auction 4 weeks ago. And what we can see from these results is that T-bill and CMB rates have been relatively stable overall the past few weeks, partially because August is normally a quiet month, but more likely also because of the Fed's wait and see message. The Fed has recently been signaling to the market, in a more hawkish tone by the way, that they can see rates staying higher for longer until they reach their inflation target. They didn't seem to signal any likely additional rate hikes for the upcoming meeting, and they definitely were not hinting at any rate cuts anytime soon. So, if T-bill and CMB rates have stayed relatively stable, what hasn't? A great segue into our next question. Where we've seen the biggest moves recently are on the medium maturity Treasury notes. This blue line shows the yield on 52-week T-bills since the beginning of this year. This red line shows the yield on 2-year Treasury notes since the beginning of this year. And this yellow line shows the yield on 10-year Treasury notes since the beginning of this year. And actually, on August 21st, the 10-year Treasury note hit 4.35%, trading near levels last seen since 16 years ago in 2007. And I know some savvy members and super savers in this community who already took advantage of some of these near record highs on those Treasury notes. What's also been on the rise since the beginning of this year is the real yield on TIPS, Treasury inflation protected securities. This blue line represents the real yield on 5-year TIPS. This yellow line represents the real yield on 10-year TIPS. And this red line represents the real yield on 30-year TIPS. In fact, the 30-year TIPS reopening auction on August 24th got a real yield of 1.97%, the highest in 12 years. And for those of you who are wondering why is Jen so excited about the 30-year TIPS with a yield of 1.97%, when the 30-year Treasury bond closed at a yield of 4.3% that same day. Remember that this 1.97% on the 30-year TIPS is the real yield already adjusted for inflation, which means that an investor who purchased this 30-year TIPS at the August 24th reopening auction, that investor will always stay 1.97% ahead of inflation, no matter what the inflation rate will be in the future. To make this real yield concept easier to understand, I typically tell folks to think of it like the fixed rate on an I-bond. Now, this 4.3% here, on the other hand, is the nominal yield, not adjusted for inflation. So an investor would have to deduct the rate of inflation from here to make these two numbers comparable. All T-bill, note, and bond yields are nominal yields and not adjusted for inflation. And that is why we need to deduct the rate of inflation from nominal Treasury yields to get to the real yield, which is how TIPS are quoted. Now, if we take this nominal yield here of 4.3% and subtract out the real yield here of 1.97%, we get 2.33%. This is the break-even inflation rate, meaning that if inflation stays at a constant rate of 2.33% every year for the next 30 years, it makes no difference whether you buy these 30-year TIPS or these 30-year Treasury bonds. On the other hand, if inflation will be above 2.33% on average over the next 30 years, then these 30-year tips would have been the wiser investment. And if inflation is under 2.33% on average over the next 30 years, then these 30-year Treasury bonds would have been more prudent. Whether you're looking for inflation protection or not, though, the point is that shorter maturity T-bill rates are stabilizing, while medium and longer maturity Treasury rates are starting to get more attractive. And likewise, TIPS rates are also looking better and better, which brings us to a question that we get often from many of you. Or have we moved some money from our T-bill ladders into medium and longer maturity Treasuries? And the answer is we're still laddering T-bills. And here's why. 1. The above 5% rates that we're getting on our T-bill ladders are still attractive to us. 2. We like the flexibility and liquidity of our T-bill ladders. The fact that we have T-bills maturing every 4 weeks or so means that every 4 weeks or so we can reassess whether we should keep auto-rolling them or whether we should do something else with those proceeds. And 3, we still think Treasuries have a bit more upside potential, even if the Fed pauses this time around, for all the reasons that we talked about in this video from a few weeks back. I've linked it in the video description below for easy reference. And if the government continues its current trajectory of spending and subsequent Treasury issuance to fund that spending, bad as it may be for our national debt long term, short term it may be a good opportunity for super savers and super savers like us. Now, there are 2 things that we're looking at right now, and that's the 10-year TIPS auction coming up later this month and the 5-year TIPS auction coming up next month. If the real yields on TIPS continue to trend upwards like they've been doing, both of these auctions might be something that we would seriously consider moving into with proceeds from our existing T-bill ladders, or potentially even proceeds from the early redemption of some of our 0% fixed rate I-bonds. That's our financial journey, though, and the Diamond NestEgg regulars here know how I think. Everyone's financial journey is different. What about you? Are you also interested in learning more about the upcoming 10-year and 5-year TIPS auctions? What does your T-bill ladder look like? And have you already or are you in the process of transitioning into medium and longer maturity Treasuries? Drop a comment below and let us know. And as always, if you enjoyed this video and learned something new, I'd love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, unbiased, sponsorship-free videos for our super saving community. Get your questions answered in our next live member Q&A on September 22nd at 5:30 p.m. Eastern Time. And do check out our latest member videos. For those of you new to municipal bonds, this one is hitting soon. To learn more about Diamond NestEgg membership, visit our channel page or the join link in the video description below for more details. All right, members and super savers, remember to share this video with those you care about so that they can keep staying as financially savvy as you are. And of course, hit that thumbs up and see you again very soon with more brand new wealth building content for your financial journey.